Welcome back. In this video, I wanted to go over my investing mentality, my investing strategy for November 12th, 2023. 2023 has been an interesting year. Overall, the S&P index is up, but we've had a couple periods where the stock market really went down. And I think we just ended one of those periods. I'm going to get into that. More importantly, as you see a lot of these factors moving the market up or down, I wanted to go over how I view it and my mentality as a long-term value investor. I'll go over my strategy, how I've constructed my strategy, how it's aligned with my goals in my investing. And it's just an example. It's my example, and I'm sure you have different goals. You have a different view of the market. I encourage you to kind of revisit your investing strategy just so you can remind yourself of what you want to do over the coming months. And that's really what I'm doing as an exercise, is just revalidating where I want my investments to go, what I want out of my investments in the next 5 years, and then setting a course. And based on what the market does week to week, I could take advantage of what the market is doing and really continue to grow my portfolio and continue down the path of achieving my goals in my portfolio. So the S&P over the past year is up 11.57%, which is close to its average. So we're seeing an up market, but it isn't without some adversity. If you look at the 3 months going from August through October, the market actually went down 10.28%. It was a significant pullback, and I really did see it. Some sectors were hit harder than others. We're also seeing that the Magnificent Seven stocks are a big portion of the S&P, and they have been holding their value quite well. So this year has been interesting to track. Overall, it's been a positive year. My portfolio has gone up in value, but ups and downs are actually opportunities for the investor that is prepared, that did their research, did their analysis, has a particular point of view on a stock. Hey, if this stock drops, I'm buying because I believe it's worth more, and for these reasons. So I like volatility. Volatility drives fear. Like when it goes down, people start getting fearful and they start selling their stocks, and it creates a better discount for me. So what drives fluctuation in stock markets is a couple of factors. Supply and demand is an example. And not too long ago, we had supply chain constraints, and it really drove up the cost of products. So consumer packaged goods companies were really doing well. Food companies were doing well. And something that's present right now is NVIDIA is just doing great. And there's a shortage of their GPUs. And that shortage is really driving up prices. So NVIDIA is super profitable. So events like that really create, within sectors, a real drive up in prices. On the flip side, you may have where there's too much supply and prices collapse. For example, logistics. If you have logistics companies right now are not getting a very good price on their service of moving goods, either on ships or on trucks. So their stock prices have really collapsed. Second thing is major events. So this war in Israel really created a shock in the market. And before that, it was Ukraine. So these big major events really have an impact on the stock market. Next is future expectations. And this one's been kind of a hard one to predict over the last couple of years. And the reason for it is we had COVID. The Federal Reserve did a lot to engineer what I would say is a not collapsing economy, because when everybody was forced to go home and stay away from the office or stay away from the factory, the economy could have collapsed. So they put in a lot of liquidity into the market, and that created a lot of imbalances in the market. The future expectations is that we're going to have a soft landing, which I believe is going to happen now. We've been talking about a soft landing, geez, for 2 years, but now I really believe it because I'm seeing earnings from companies come in and their earnings are good. If you follow my channel, I really track a pretty long list of stocks, And I would say that 80% of the companies are doing well. They're profitable, they're growing. Although some of the growth isn't great, but they're growing. And some of the growth is quite excellent. So future expectations affect the market. And I think that the economy, I think, is going to do okay. And I think it's going to start to really grow probably in the middle of 2024. Interest rates have been probably the biggest story in the last year and a half. They have really gone up, and that really affects valuations of stocks. It also drives up the opportunity to invest in bonds themselves. I've been buying into bonds because they pay a really good rate of return. And as mentioned in my goals, I have a goal of retiring. Well, if I have a really solid bond portfolio that generates really good income, that's going to help me with that goal. And last is emotional decisions. So the fear index, I think as fear enters the market, opportunity goes up. And if you look at the last time we had a huge correction was the COVID year, 2020. Stock prices just collapsed. And those who pulled their money out probably lost a lot of money. People who stayed in and actually put money in saw a very fast correction in that market. I've seen corrections, probably 4 or 5 of them that were significant. And on every occasion, it was not a good idea to sell off in general across the board. If you felt that one business in particular was just going to be demolished and probably go bankrupt, yeah, sell that one. But just to sell off just based on fear is always a real bad idea. Now, when fear is high, it's a great idea to buy and research companies and buy the companies you believe are being sold at a discount and they have a very bright future ahead of them. So as we see that emotional, roller coaster in investing, I encourage you to be the investor that's prepared with analysis. And it's not fun to see corrections. It wasn't fun over the last 3 months to see stocks go down when I believe that they are worth more. But you got to really hold to your strategy and buy when it's uncomfortable. You also got to sell when it's uncomfortable. I've sold off some positions, and I would say for the most part, I've done really well. I sold, stocks where I had 10 baggers and I sold them off, even though the stock was climbing and was doing incredibly. In some cases, I left the position and saw the stock keep going up. I sold Amazon probably early, but I made a lot of money on Amazon. I sold Tesla probably early, but I made a lot of money on Tesla. It had exceeded the value that I expected from the company, and it exceeded it by such a margin that I had to sell. So those are the things that I follow. And in general, I've done really well by following my analysis and following the discipline of I buy stocks that are discounted. I hold stocks that can hold their value in the market. I might keep a stock that has a reasonable amount of premium on it, but in general, stocks go up and down. Study any stock out there, and without exception, you're going to see that stocks go up and down. So use emotion in your favor. When everybody else is fearful, be greedy. When everybody else is greedy, be fearful. Over time, stocks have gone up dramatically, and there's no arguing with the data. There's been periods of time when stocks didn't go up a whole lot. They actually traded sideways. But in every single market, there's always stocks that are discounted. The stock market is a very broad index. It's a very broad measure. Within that economy, there are companies that are undervalued. They're misunderstood. The market's not paying attention to them. You think that something's going to happen in the next 12 months. It's really going to positively affect that company. And there's always stocks that are good buys, no matter what market we're in. And there's stocks that are overpriced in every single market. But overall, being a long-term investor pays off. And the data, you can't argue with the data. If you've invested and we're wise about it, over time, your investments are going to go up in value. Now, if you've been investing for some time, it's likely that you've heard this before, but I like to remind myself of something that's really important to be reminded of. And that's that in the short term, the stock market, Mr. Market, it's a voting machine. It's a popularity contest. It's a, hey, AI craze. Hey, everybody's buying AI stocks. Even though we don't have any business model yet, everybody's betting that, oh, it's going to revolutionize the world and be awesome. Well, that was the metaverse like 2 or 3 years ago, and it didn't quite pan out. And a lot of things need to be sorted out. So the voting machine, I don't pay attention to it, or I should say, I don't act on the voting machine. I'm more of a long-term value investor, and I believe in the weighing machine, meaning the fundamentals of a company are going to drive a long-term value. And that means that if a company produces free cash flow, the company's growing, the company has a competitive advantage, and they have really a strong hold on a particular market. They continue to grow and diversify. Those are fundamentals that I believe over the course of time, over 5 years, those companies have rewarded me over and over again. So it's a really important concept to just be reminded of that, hey, let's not react or overreact to the short-term news, the short-term voting machine things. And I think the biggest one right now is artificial intelligence. And I believe artificial intelligence is going to happen. I think it's really interesting. But I can't tell you which business models are going to be the best ones, which ones are going to work, which ones are just going to be a bunch of just nonsense. And with that in mind, I don't want to act too early on AI. I think it's interesting. I have some companies that are invested in AI, but I'm not going to go overboard on it. Instead, I'm going to follow the principle of long-term value investing. Now, looking at the last 5 years, the S&P overall has done well. It's up 61%, but you saw a lot of adversity. The COVID correction really was a jagged one. And again, people who sold off during the COVID correction, they really paid dearly. They probably sold off and were coming back into positions and really left a lot of money on the table. I wanted to focus more recently, and that's on 2022. There was a correction of 24.8% in the S&P. Some stocks like Meta, as an example, it went from over $300 a share down to the low 80s. And it's the same company that was trading a year prior, but it was just really, really discounted. It was probably one of my best investments, and I've held Meta for a long time, but I bought more shares of Meta. I just believe that the market was wrong, and I made a significant gain on those shares. So the reason I wanted to focus on 2022 is that it gives me more confidence. The stock prices are not overly valued or overly priced. We had a solid correction in 2022. I showed a little earlier that we had a correction for 3 months from August through October. So it's feeling like stock prices are probably at a good level. They could go up higher. They could also go down, but I think that having had 2 corrections in the last, call it 16 months, it gives me more confidence that, hey, stock prices are probably going to rise going into the future, which leads me to the conclusion of the video and why I believe stock prices will rise. And I'm not saying they're going to rise this coming week, but I think that my mentality is that stock prices are probably going to rise over the next year to 2 years based on these factors. The first one is that interest rates are not going to go up further. The Federal Reserve has done their job of controlling inflation. They've created really high interest rates compared to just 2 years ago. The housing market's really feeling it. Other sectors are really feeling those high interest rates. Companies that are holding a lot of debt are really being punished because they're having to pay a lot of interest, especially as they have to reissue debt to pay off debt that's expiring. So interest rates, big factor. Not expecting them to go up higher. And we'll see how soon they're going to start going down. Might take a year, might take 2 years. We'll see when that happens. The sell-off from August to October, it makes me feel more comfortable that stocks could rise. And I'll take it back to July of 2023. I was uncomfortable. The big run up in the S&P and the big run up in stocks, it put me in a place where I was selling off positions. I sold off, some Meta stock, Google. I sold off Amazon. I sold up some really good quality company shares. And the reason for it is I just felt like the market was just overdoing it. And I wanted to take some of those gains and really make sure that 2023 is going to be a winning year for my portfolio. And that is based on, my analysis. It's based on my research, and it's based on the decisions I'm making. And I thought that the market was greedy in July. And it ended up, happening that it sold off. And I guess that intuition had some accuracy to it. So the sell-off in August through October, again, it makes me feel a little more comfortable that the market could rise. And third, the soft landing. The soft landing, I think, is going to happen. If you consider that companies are issuing out, growth in their businesses are profitable. And I think that the recession, once it happens, it's not going to be too bad. I think we've been bracing for it for 2 years, and it should be a soft landing. We should get through it. Maybe begin to see overall growth in the economy in 2024, and that would really fuel a rally overall in stocks. So that's my video on my long-term value investor mentality, my philosophy, my strategy. Investing is, for me, just super interesting and fun. And it's really interesting because it's really a lifelong endeavor, and you just constantly learn. I try to be humble, not to ever think that, hey, I know certain things for sure. The market will humble me over and over and over again. But it's really important to have a particular strategy and really remind myself of that strategy so that I could stay on course and course correct where needed. Constantly learn from successes and learn from failures. There's a lot of stocks that I've had to sell because they surprised me to the downside. And there's lots of stocks that I've made, a very good gain on. And I learned from that too. There's always an opportunity to learn. So I hope that you found the video interesting. Leave me a comment. Let me know what you liked or disliked about the video. I'd love to hear from you. And please like my video and subscribe to my channel. Good luck investing for the remainder of 2023.